Hey, good morning, everyone, and welcome to this morning's Coffee Microcaps morning meeting. You're all very welcome. My name is Mark Tobin. I'm the founder of Coffee Microcaps. For anybody who's joining us here this morning, and for all our kind of regular attendees, welcome back. I would like to mention RAS Researchers as a Service, who are our sponsor for all our online events here at Coffee Microcaps. If you are looking for some institutional grade research on some small and microcap names, probably not covered by any of the other brokers on the sell side, please do check out their website. And as always, welcome to anybody from ASIC who's joining us this morning. For anybody who is joining us for the first time, the companies we tend to have on here, and we run these events kind of every second week, and capped under 300 million, our definition of a microcap in revenue, and approaching cash flow break even, or indeed already profitable. We tend not to have companies on here from the resources and biotech sectors. That's what I would like to call industrial microcaps, which are catch-all for microcap healthcare, financial services, consumer businesses, professional services businesses, um, and everything in between. Structured this morning's webinar, we have only got one company joining us this morning, but I'm delighted to be welcoming them back. They're going to present for 20 minutes, then we'll do our standard 10 minutes of Q&A. If you do have any questions for them, please type them in the Q&A box rather than the chat function. Just makes it easier for me to moderate the questions. Please note the webinar is being recorded and will be posted on the Coffee Microcaps YouTube channel on Monday morning. Follow us. You can get us on Twitter, YouTube, as I say, for the recording of this event, and indeed all our other events. We've done well over 100 of these now over the last 3 or 4 years. So there's quite a big backlog, and you can see all of those on there. LinkedIn, and I do a monthly newsletter that generally comes out in the first week of the month that you can get on Substack. I'm delighted to be welcoming back Plenti Group. A name familiar to people who have been on here before. We're welcoming Miles Drury, CFO, and Adam Bennett, the new CEO. So without further ado, I am going to stop sharing my screen and I will hand you over to Miles and Adam.
Thank you, Mark, and good morning, everyone. I'm delighted to be addressing the Coffee Microcaps audience here on the webinar. And Mark asked me to just do a quick introduction of myself. So I've been at Plenti now for 4 months, and before that, I was the Chief Executive Officer for New South Wales Land Registry Services, the privatised land titles office for New South Wales. And before that, I had 13 years at NAB in a range of roles, including Chief Information Officer, Digital Direct Banking, Strategy Execution, and Tech and Ops. And before that, I spent 13 years at PwC Consulting in corporate operations strategy practice. And again, let me say, I'm delighted to be talking to you all today. I'm also very pleased to be sharing a great set of results. And I know all of the team, the extended team at Plenti, have worked extremely hard over the half to deliver these results. And since joining, I've been extremely pleased with the caliber and energy of our people and their collective ambition for our company. So as Mark said, I'm here with Miles Drury, the CFO, and together we're going to walk you through a couple of slides. So just let us get those set up.
Yeah, it's coming through now, Adam. Yeah, I can see the cover slide of the deck now, so you and Miles can take it away.
Thank you. So I know some of you may be familiar with us, but for those who aren't, Plenti is Australia's largest fintech consumer lender. And our cash NPAT is growing strongly as we leverage our proprietary technology to deliver a leading market experience for our customers in automotive, renewables, and personal lending. We lend to prime borrowers only, and we have an exceptional 10-year credit track record, enabled by deep and diversified funding from our warehouses and asset-backed securities arrangements. And it's fair to say we're unashamedly ambitious to build Australia's best lender. So one of the many reasons I joined Plenti as CEO was the distinctive competitive strengths I think we bring to the market. Number one is our great team. We've got an engaged, highly productive team that's committed to building Australia's best lender. Number two is our proprietary end-to-end technology stack, and that enables our fast, simple, and easy customer journeys. And they're continually improved by our fast, flexible, efficient, and continuous release cycles. I'm also excited about the two platform capabilities that we have, the Green Connect platform in the renewable space and our peer-to-peer Plenti lending platform, which are quite distinctive, and they do deliver significant network effects and differentiation within our markets. And number three is our partnership capability. So our modern technology architecture enables deep and seamless partner integrations with go-to-market partners such as NAB, Tesla, and Cadillac in the auto space, and AGL and Amber Energy in the renewable space. So we're pretty happy with those relationships. As I mentioned, after over 13 years in financial services and 30 years in change, I've noticed that technology stacks can be like children. Everyone thinks theirs is the best. It's therefore nice to hear when other less biased and independent people think your technology stack is pretty good too. And so at Plenti, we have a 10-year track record of delivering award-winning business outcomes in industry firsts across the personal lending, renewables, and auto space. And our technology is at the heart of all of this. We've won over 45 awards from a range of different organizations such as Fintech Investment Innovator of the Year, CanStar Outstanding Personal Loan, WeMoney Non-Bank Lender of the Year, and the Deloitte Technology Fast 50. And most recently, we've created these deep system integrations that enable us to deliver compelling customer journeys for our go-to-market partners such as NAB, Tesla, and Cadillac. Our half-year highlights. So this is a really balanced set of results with an improvement against every single measure. And it demonstrates that we're making good progress on our goal to build Australia's best lender based on speed, service, reliability, and value. It's great to see that we've grown our H1 cash NPAT by 260% on prior period to deliver a $5.5 million result for the half. And what these results show is when everything we have is working well together, including our origination, our fulfillment efficiency, our technology, our credit performance, will deliver great outcomes for our shareholders. And this NPAT was the result of disciplined and profitable growth in our originations, and we wrote over $627 million in loans through the half. This takes our loan book to $2.28 billion, which was an increase of 14% on the half. I'd also like to acknowledge that the Plenti team hit a great milestone during the quarter. We're now originated over $5 billion of loans to customers since we formed. And again, that's a direct result of the vision and hard work of our founders, Dan, Ben, and Glenn, and the entire Plenti team, and the fast, easy, and well-priced loan products that we've got in the market. We also launched the NAB Powered by Plenti car loan, and Miles will speak a little bit more about that in a moment. And overall, we delivered really strong credit outcomes with a 1.1% realised loss rate and a material reduction in arrears rates through the half. Now, these are a great set of graphs that show our ongoing story. So on the left here, you can see the loan portfolio with a great long track record for driving strong loan portfolio and revenue growth with a 35% 3-year CAGR for the loan portfolio and a 49% 3-year CAGR for the revenue. So it really underpins the story, and it's a really good continued progress against those. If we take a step forward, increasing profitability, you can see here the loan book and revenue growth combined with careful management of costs and thoughtful management of credit helped us to deliver a 260% increase in NPAT to $5.5 million. And that's also after we've expensed $7 million of technology costs that we incurred. So we expensed that rather than capitalize that. And we're extremely pleased with this result. We look forward to driving the business for profitable growth in the second half. So again, you'll recall I mentioned there's three verticals. So number one is automotive. So we had very strong growth, strong performance, in automotive with $321 million of originations in what is a very competitive market with a loan book growing 15% on PCP. We remain very focused on customer segments, including consumer and commercial borrowers, new and used vehicles, cars, caravans, and motorbikes. And we continue to leverage our distinctive competitive advantages in technology to deliver really good and compelling customer journeys and deep integration with partners. We did a Tesla subvention deal during the period, and that delivered some really strong outcomes for us. And we also launched the NAB Auto Loan powered by Plenti a week before the end of the half. The Tesla subvention program was notable in the period. We were offering a compelling 1.99% interest rate on the Model 3, which really helped step up our origination volumes for EVs. And we've been very happy with the Tesla partnership so far. And it also demonstrates the speed at which we can integrate our technology and produce really good commercial outcomes. That program will continue in the coming half and will now include the Model Y, which is Tesla's most popular vehicle. We also negotiated an agreement with Cadillac as their new exclusive finance provider for EVs, in particular the Lyric model. And I mentioned the NAB powered by Plenti auto loan that we launched a week before. So looking ahead, we're very confident of being able to grow our share of what is a significant market. So you'll see there, we've got about a 4% market share of a very large market. So we're really now seeking to put the foot down and go a lot harder in the auto space. That brings me to renewables. So this is about the financing of solar panels and batteries. And we delivered record origination volumes in renewables of $88 million, which is up 15% on prior comparative period. And this was our 18th record half in a row in this channel. So this is a very, very fast growing part of our business. We built on our great relationship with the Clean Energy Finance Corporation to secure $60 million of discounted funding. And we continue to grow the Green Connect as a platform business. And that enabled us to grow affiliated applications on Green Connect by 47%. We're also extremely proud to be leveraging our tech stack to help support the renewable electrification of society. And we funded 8,000 solar systems during the half, of which nearly a third had a battery as part of the installation. And again, looking ahead, we're also confident of being able to grow our share in this significant and critical market, which leads me to personal lending. So we continue to grow significant volume in the personal channel with a high quality borrower base. The overall competitor set in this space has settled down somewhat, but we did see over the half lots of moves from competitors on pricing and players using price matching to try and drive volume. Key partners are now reporting higher lead quality and strong conversion trends. So we're pretty happy with this. And we've seen improved funnel efficiency through the period. And we've also been building our business development team to drive greater growth. Our loan book grew 8% on prior year with 218 million in originations, and we've now exceeded 1 billion in personal lending via the broker channel. We've invested in our credit engine to drive greater automated credit decision rates and improved borrower conversion metrics, and that's something we're looking to do in the future as well. So we remain focused on unsecured auto, home improvements, debt consolidation, and significant life events and purchases. And again, we're confident we can grow our share in this $12 billion market. Just a little bit more on our technology, because we do believe that this is really a distinctive advantage for us, and other people think that as well. So I'm extremely pleased with our tech stack, and it's really our investments are focused squarely on delivering great customer outcomes, supporting our strategic partnerships, and continually driving operational efficiencies. I've already highlighted some of the integrations that we've got with the likes of NAB and Tesla and Cadillac, and that really helps us do things quickly with them. And we've also commenced some experiments in using artificial intelligence in content marketing and document processing. For content marketing, we're experimenting with generative AI tools that create content for our web pages that responds well to online search terms and makes our digital marketing more effective and cheaper. And on the document processing side, we've used AI machine learning models to extract data from auto dealer invoices, interpret them, and then pre-fill information for our settlements team. And this is moving us closer to our goal of one-touch settlements, increased straight-through processing, and an even lower cost to income. And lastly, we continue to invest in our core platform ledger to deliver additional customer benefits, increase our processing efficiency, and underpin our ability to scale the loan book. So I'll pass to Miles now to continue walking through the story.
Thanks, Adam. Just on a couple of financial slides, operating efficiency. I love this slide as a CFO. This is exactly what you want to see. The blue line there is the net margin dollars. So dollars we've got available to cover costs and deliver profitability to shareholders. And the relationship between that and the peach line, which is our operating costs. And what you can see there is we've grown our margins significantly more faster than growing our costs. In fact, it's been 2 times over the last 5 years. And really that that difference between income growth and cost growth is what sort of explains the improving profitability story of the business over the last few years. Over on the next slide, we talk about credit. Adam's mentioned we are a prime lender. We seek to lend to people who have high incomes, high credit scores. Typically, our borrowers are homeowners. And so that chart on the right there shows the average credit score of our portfolio. So 842 was the average in the current period, and that's substantially higher than the average credit score of the broader population. What you can see there is the loss rates that it gives us on the left side there. And something that's important here is that more than 70% of our loan book, with the growth in automotive and in renewable, is now in lower risk categories. And you can see that with the way the loss rate came down over the last few years. It did step up post-COVID. We know that was a particularly benign period, but in the last period, it was pleasing to see that loss rate come down. And that was really driven by consumers continuing to be able to have cash available to pay their obligations, notwithstanding increases in interest rate and increases in inflation. And the consumer actually, from what we can see, is in quite a good place. So we had a 1.1% loss rate in the period, which is very strong relative to peers and relative to the market. Just talking about the NAB partnership, we announced this about 12 months ago, and it's a really exciting initiative for us to be able to drive scale through our business. The core of the relationship is a new automotive product, an EV and car loan that's going to be co-branded NAB and Plenti and offered to NAB's personal banking customers. NAB previously didn't have a consumer automotive loan, and so this fills an important gap in their product offering. Two things really to call out here. One, we see this as a really strong validation of Plenti's technology, that NAB chose us as their partner. They could have chosen anyone in the market, and they came to Plenti. And secondly, it gives us an exciting opportunity to grow. We launched that to the broader market of their personal banking customers just at the end of the half. And we have said the next 6 months is really about testing and proving out that. But in the medium term, a really exciting opportunity for us. And then beyond that, there's another opportunity we're working on together, offering a renewable energy product to NAB's customers off the Plenti platform, and then hopefully continue to find other opportunities to work together. So an exciting strategic growth opportunity for us in the medium term. And I'll just pass back to Adam to wrap up with our objectives for the full year FY25.
Thanks, Miles. And so looking ahead, our priorities for the second half remain growth, profitability, and efficiency. I'm already happy to note that origination volumes for October are strong, up 28% on PCP. And having just delivered a 260% uplift in first half NPAT, a more balanced profile is expected in the second half. We remain on target to deliver scale efficiencies as we push towards a $3 million book. And let me close my remarks really by saying that I'm extremely pleased with this set of results and the hard work of everyone in the Plenti team. And having now been in the CEO for 4 months, I'm very excited about the opportunities to leverage our technology and deep partner integration. So looking ahead, we're going to focus on disciplined execution in our 3 existing lending verticals of auto, renewables, and personal lending. We're going to leverage the NAB relationships to drive moderate auto growth for the rest of this year, and then explore renewables opportunities with them next year. We're going to continue to leverage our technology to deliver compelling customer journeys. And also we're going to focus on driving our cost to income ratio down further through greater automation and continuous improvement. So let me now pause and open it up for questions.
Thanks, Adam. Thanks, Miles. Yeah, we had a few coming in there, so let's tackle them. It says here, for the lay person, if your annualized net losses are sitting at 1.1, and then why is provisioning so much higher at 2% of the book? Miles, maybe you want to take that one. I don't know if you want to pull back up the slide you had there of loss rates through time. I think it was the second last slide, maybe.
Yes, which does come down to about 1%. Look, I mean, the provisioning really is driven by the accounting standard and expected credit loss requirements. And particularly there, one of the requirements is that you have a lifetime loss rate on particular loans, depending on their indication of losses. And so actually, it's not just covering the next 12-month period. It's actually covering a materially longer period than the next 12 months. And so that's why you typically see a provisioning rate is sat round about 2 times the actual experienced loss rate, because it is covering that lifetime rather than just the next 12 months of losses.
Okay. And next one, I think they're referring to maybe a slide that wasn't in this deck, but I remember from the results deck, there was a pie chart there on, the ABS, what comes in from the peer-to-peer lending
Mm.
piece, and it's talking about, how will this funding mix change as you kind of grow with NAB? Obviously, NAB's got a huge pipeline of customers that, can really materially, over the lifetime of the partnership, continue to grow it. But what does that mean for your funding mix overall then?
Yeah, absolutely. So the NAB loans will actually be funded onto NAB's balance sheet. So while we do the customer application process, we do the credit underwriting, we're doing the settlements, we're doing all the cash payments, it's actually money coming directly off NAB's balance sheet. So we actually don't need to put it on our balance sheet. The reason that we really like the NAB product from an economic point of view as a CFO is probably twofold. One, because it's on their balance sheet, we don't need to contribute capital as we would normally for our own loans, which means it's a very high return on capital business. And the second important thing is that actually the losses on those loans are borne by NAB rather than by Plenti. And that also means from an income volatility point of view, if you were ever to have an economic downturn, actually that portion of our income stream is much more insulated from it. Now, we're still looking to write really high quality loans. We want to write, NAB wants to write prime business with us, but the economic construct is a bit different. So it's higher return, lower volatility business, which obviously, from an economic valuation point of view is a good thing to have in your business and is a nice complement to us continuing to grow our core business.
Another one then, I think you have touched on this, but yeah, maybe further updates on the NAB partnership post-launch. Is everything going to planned internal budgets? I know you said there just at the end, it's trial and test, and it's probably a bit of A/B testing going on in terms of, okay, we've pushed it to this customer group, we haven't had the success. It's trying to find the sweet spot in the NAB personal customer base that is really looking for this product.
Yeah, look, we're where we thought we would be, Mark. So
Okay.
we launched to internal launch to NAB employees in June, and then we launched to customers on the 23rd of September. So we only really have a week's worth of volume in the half results. But we were very careful at the time to say that we were only expecting moderate growth over the coming 6-month period as we do bed down, and especially on the NAB side, some of the things they need to do as a very big technology shop. And so we're confident that we will get through that period. We'll deliver some moderate volumes through the next couple of months, and then we'll start to see more volume come, and we'll really be looking to accelerate loan originations. In the period after probably March, kind of March, April time, we'll start to ramp that up. So we're where we thought we would be. Where we kind of signaled that it would be moderate, and then we'll be looking to go a lot harder.
Yeah, and staying on this one, people are very interested in this NAB opportunity. Is there just an interesting one? Is there any performance payments to Plenti give for the book performance side, or I don't know if they're talking about what you can actually, drive for them or the credit loss experience?
Yeah, it's very much linear in line with how much is originated on the product. So the more we originate, the more money we get. There's a direct relationship between the two. But look, there's not a direct sharing of losses. They are all to NAB's account. But we're very careful, and the last thing we want to do is write business for NAB that doesn't have the right credit profile for them. And so they've been funding our loan book for over 5 years. NAB would have more than $1 billion of balance sheet out to Plenti through warehouses and ABS. So they've got good confidence in how we approach credit and the type of quality of credit we write in auto.
Another one then. And do you envisage Plenti doing other similar partnership opportunity? I know you spoke to it, but is it hard to do something with, Westpac now that you've done something with NAB, or is it more, in another vertical? So we'll do something in renewables, maybe with
Yeah,
one
look, it's
company, but that's not to the
I'm
exclusion of because we've done something with them on and a competitor in Aarhus.
Yeah, look, a couple of things on that. So one, I'm very focused at the moment on making sure we extract value from all the things that we've got. And when you lift the hood on Plenti, there's some really, really good and interesting things that we have in a relatively small company. So we've got great relationships with very, very significant partners such as NAB, which is something we really value. And I do believe that will become a very strategic and deeper partnership as we push into certainly this auto opportunity and then things like renewables. And then also, organizations like Tesla and Cadillac and AGL, some of the relationships I mentioned. And I'm also focused, we've got very, very kind of good and well-positioned products in very, very large markets. So automotive, we've got a great market there and a relatively small share. Same within personal loans and same within renewables. So I think before we start looking kind of too far afield, I want to really focus on extracting as much value from the relationships and the arrangements we've got in place and our deep tech stack in those three verticals.
Okay. Just going back to the renewables, or let's focus on that for a minute. Very strong growth in that yet again. I mean, what is driving the growth in that? Is it, big push on marketing from, the Plenti team? Is it people responding to, government incentives that are out there at the minute? Or is it people responding to, okay, electricity costs have kind of come down from some of the crazy stuff we've seen in the past couple of years, but was the scar tissue of those crazy electricity prices kind of enough to kind of push people over the barrier to say, no, we definitely got to look at solar. Like we can't have, a return to that. Like, it blew out the budget for 4 or 5 months. Like now is the time. Like we just got to do it now, and we're giving ourselves certainty. I'm just wondering like what continually drives it
Yeah.
half after half.
You look, I would say you've mentioned four things. I would say all of the above. So all of those things I think are playing a role, Mark. So it's a very vibrant market in terms of the electrification of society and climate. It is on people's minds. So there is a natural demand for panels and batteries as people look to become more renewable in how they live their lives, and we're certainly well positioned for that. And obviously, we're starting to see government initiatives as they encourage and incentivize people to go down that path as well. And we also believe with things like Green Connect and our technology, we've put ourselves in quite a distinctive position where we're very well placed to help that electrification of society. So all of those things that you mentioned are really driving a great environment for us to keep pushing very, very hard in. And also on our side, good old-fashioned kind of sales management, business management, working the funnel, doing all the things you'd expect us to be doing to drive growth and profitable growth in that area.
I would note that the battery piece is important because if you put a solar panels on your roof, that might be a $10,000 investment. If you're putting batteries, it's 25,000. So if you have just the same number of people, putting in, renewable energy into their home, but it's larger, you're growing the market there. And also you're more likely to want to have financing if you're doing a $25,000 investment in your house than if you're doing a $5,000 to $10,000 investment, which people might be able to cash fund or credit card or something like that. So that battery trend, and we've really tried to be at the forefront of that, making it easier for installers to sell batteries, and hence that has been a contributor to the growth.
And is there an opportunity for, or maybe this is already happening just when you mentioned the funnel there, Adam, cross-selling between, okay, we funded a loan to Miles for a new Tesla after such a good set of results. But, then you target him then with the Green Connect offering to, put in solar at his home, or the other way around, does the Tesla opportunity, outside of Ojo, is there something we done on the battery side with them in terms of the green?
Yeah, we're both smiling.
I really like how you're thinking, Mark.
This is Adam's favorite topic.
But yeah, maybe is that cross sell happening? Is that an active piece of data
Look,
mining?
I think when I look ahead, I mean, this is something. There's so much opportunity for us to look at things through a slightly different lens, and I think the tech stack that we have is very well placed to allow us to pursue some of these different opportunities. So that's something that we're going to be really taking a sharp look at.
So we do it, but not nearly well enough.
Yeah.
So there's opportunity from doing it much better.
Okay, perfect. Gentlemen, we're pretty much bang on time here. And I know you have had a busy few days. So thank you very much for making time for us to squeeze it in at the end of a busy week. And yeah, hopefully we can get you back in at some stage in 2025.
Yeah, thank you, Mark, and thank you for the opportunity to talk to all the people on the webinar, and thank you for your time and support. We certainly appreciate it, and for your questions. So it's been good to talk with you and tell the Plenty story. So thank you.
And thanks, everyone. Thanks, Miles. Thanks, Adam. And I'll wish everybody a good rest of their Friday. Enjoy your weekend. Thank you.
Bye-bye.
Bye bye.